I'm Matt Bishard with REIT.com here in San Francisco for REITWorld 2013. Joining me for this CEO Spotlight is Stuart Tanz, the President and CEO of Retail Opportunity Investments Corporation. Stuart, thanks for joining us today.
Thanks for having me.
Now, you said that 2013 is shaping up to be one of the best years for your company, and that's due in no small part to a very active acquisition pipeline. Can you talk about the deals that you've made and the type that you're still targeting?
Well, 2013 has been our most active year in terms of external growth. We reported as of the third quarter about $368 million of acquisitions, and our focus in terms of buying these assets have been on the West Coast and the primary markets. Looking forward, we're very excited in terms of looking at our pipeline, and what we really focus on are what we call direct-to-owner transactions, which are primarily all off-market. And that's really through deep relationships that we've had here on the West Coast for over 20 years.
And the company received its investment-grade credit rating earlier this year. What impact does that have as you look to set the strategy for the company and executing on that strategy?
Sure. Well, we did get an investment-grade rating from both Moody's and S&P. Certainly for the company, that was a big event for us because when we built the company, we built it with no assets initially, so we were able to build a really strong balance sheet from scratch with not having to deal with any legacy issues. But being investment grade is an important milestone, really for two reasons. Number one, it gives us the ability to access the bond market or the unsecured bond market, and more importantly, by having that ability, it gives us the ability to lower our cost of long-term debt capital and gives us access to debt capital. In terms of getting our credit ratings, the other big advantage was the lowering of our borrowing costs because within our credit facilities, unsecured credit facilities, we were able to bring the cost of our debt capital down substantially by getting those ratings. So very important milestone for us. We're very proud of it. And, it's taken some time to build a balance sheet in the company to get to that point.
And as you look across your portfolio, are there any markets where you expect to see outperformance? And related to that, are there any markets where you're looking to expand your presence?
Well, again, our focus is the West Coast, the primary markets on the West Coast, which is Seattle, Portland, San Francisco, the Bay Area, LA, Orange County, and San Diego. Those markets, in my view, are some of the best markets or most sought-after markets in the country for a number of reasons. Very tight supply in terms of barriers to entry. The markets really offer a lot of fragmentation in terms of further growth. And then more importantly, the demographic profile of where we're investing is very, very strong. In terms of these markets, though, I will tell you that Seattle and the Bay Area have really outperformed the other markets on the West Coast, but what we're seeing right now is Southern California is really beginning to show some resilience in terms of coming out of the recession. So looking forward, I would tell you of all these markets, Southern California is probably the one market that we're going to get a lot of traction as we look forward over the next several years.
Stuart, thank you so much for joining us today.
Thank you for having me, and have a great day.
For more from REITworld 2013, be sure to visit REIT.com.